Hey, good morning. This is Dwayne, CFRN. It is Wednesday morning, 31st day of July, 2013. It's 1:15 a.m. I just finished making a video, which was the daily wrap video for Tuesday. I had not planned to make yet another video tonight, but at the tail end of that video, I said there could be the potential for a trade on the upside. But the market's gonna have to do some work. So this will be interesting for you. If you watch Tuesday's daily wrap video, you'll see that we were right about here, right in here somewhere. Okay, I said there'll have to be a bullish cross, we'll have to get some bullish divergence. I said a lot of things have to come together in order for there to be a trade on the long side. And why were we interested in a trade on the long side? Well, let me show you. It's in the video, the other video as well, but see, price has been oscillating around the weekly trading zone the entire week. Okay, here's the zone 82.83, above, below, without ever getting to one of the other zones, and that's very unusual. So we do have a tweet out there that says you can be long above 89 because we have to get above the fray. Unfortunately, that only gives you 2 points room to run, which that's fine. We'll take a 2-point trade any day. You get in at 89, you got to be ready to pack it up and call it a day at 91. On the flip side, we have a tweet that says you can get short below 76, but again, you're done at 74 because we expect that to be good support. I did say on the last video that you could trade this, all the way up, but you would have to use, because the way this is staggered, okay, you would have to use the 4-tick range in order to enter the trade, because I can't just give you a number. I just can't pull a number out of the air because of the dynamics of the market, the way it's shaped up this week, doing this odd business of getting within 2.5 points of the zone and then getting within 2.5 points of the zone. Funny business, alright? So I'm going to leave you with this. I'm going to pause this video with this trade setting up right here, okay? And then tomorrow morning I will come in, I'll turn the recorder back on, we'll finish talking about whatever happened. And so this arrow symbolizes where I turned off the video. Now let's talk just real quick before I hit pause and go to bed, where I should have been an hour ago. My mother had a saying, anyone who's up after midnight is up to no good. So, Mom, I'm sorry. But I call it work, or other people call it work. I call it being blessed. But anyway, we need this. All right, we've got the bullish cross. Check. Price is pulled away. Check. We hope price will pull back. Check. In other words, price will come back and touch the BBC here, the green line. That'll be number 3. See, bullish cross is 1, price pulls away is 2, price pulls back is 3. Okay. And then number 4 is we have to have some bullish divergence. Well, I can tell you at the moment we don't. This is actually bearish divergence. When the green line is above the cycle line, this red and blue line, that's bearish. Don't overthink it. Don't even go there. Just accept what I said. If the green line is above this line, that's bearish. Better way of saying it. You see, even I have to complicate it, right? When the cycle is below the green line, that's bearish. When the cycle line is above the green line, that's bullish. See? Cycle line up top, bullish. It's wherever you can draw the arrow to pointing at it, right? If you got to draw the arrow down to point at it, that's bearish. Doesn't matter if it's red or blue. Now, that does affect the trade entry, whether it's red or blue, and that has to do with the trend line, and I'll show you that on the video when I continue this recording tomorrow morning. Okay? we're going to have to, when we turn on the recorder, we'll back the video up. You won't even know. It'll just be literally a blip on the screen. But you'll be able to tell by the clock down here. See, it's 1:20 a.m. I think you can see the clock in this screen. I'm pretty sure you can. Anyway, it's 1:20 a.m. Pacific time. This blue line down here has got to cross above the green line. Okay. So we have bullish divergence. Price has to pull all the way back to the BBC. If the cycle stays blue, then all we need once we touch the BBC is an up close. If the cycle, once it crosses up here, if it turns red at any point prior to or during that touch, then we got to have an up close above a little trend line. But I'll show you in the morning, okay? That's one thing about the markets. Even if I oversleep, the markets won't. They wake up on time every day, and when I come in and sit down at my desk, they're there. They're working. They're doing the deal, man. It's, gosh, I'd love to see it come together right now and just be able to walk you through the trade in real time. But we get so many of these a day across all the different markets. It's not that big of an issue. See how these are starting to come together? We need this cycle line to get up top. That gives us our bullish divergence. We need price here to come back and touch the BVC. Then an up close, and then we're in. What's beautiful about this setup is we got a ton of room to run. The zone overhead is at 91/92. 91, 92. You can see it easily here. 91, 92. Okay. All right. Now I got to move my arrow over because we are on that candle. Okay. So remember, yellow arrow up here means don't worry about the ones down here. This is where we paused the video recorder. Okay? Good night. See you in the morning. Okay, it's me. I'm back. I told you I would be, right? Now, for you watching this video, there was just like a little blip in the screen. You don't even know anything happened. I just had a full night's sleep. Well, for me, it's a full night. Anyway, time now 6:45 a.m. Pacific time. Today is Wednesday, 31st day of July, 2013. I said I would leave the chart just as it was so we could go back and see what happened on that trade. I haven't even looked at the charts yet this morning. I woke up and when I turned the monitor on, this is what I got. So, as you can see down here, Pacific time, 6:43, we got to scroll back to where we left off last night. And let's see what happened. Remember, we put a yellow arrow on the screen to mark the spot where we left off. Okay. Now we gotta mentally walk through this scenario again. We were looking for a potential long setup, correct? So let's see what happened. Okay, this is a perspective on what it now looks like on the hourly chart this morning. That tweet we had overhead to consider being long above 89, that still has not been breached. Okay, and of course the one on the downside has not either. And we had said the best we could hope for was to try to get some kind of a long trade on the way up to this area, right? And so that's what we're checking on the 4-tick range to see if we got that. We had the bullish cross that was in place last night, but we said we needed price to pull away. We needed the price to pull back. We needed to have bullish divergence and all that jazz, right? Okay. Here's the bullish cross. Here's the pull away. Here's a pull back, but it doesn't pull all the way back. Now, you're going to have to check with Michael on this. Michael's got a little variation of this trade that he does, a little momentum trade where price doesn't have to pull all the way back. As long as there's bullish divergence, the blue line is above the green line. He's got a trade he can do here. He can show you, ask him how. I wait for the full pullback. It's just a personal preference, you know, and so I do. For me, I feel like it gives me just a higher probability trade. So you don't have to, but you can. All right. So I wouldn't have gotten in here because we didn't pull all the way back. So it rallies again, pulls back again, okay, and it did put in a higher swing high here. So it pulls back, touches. That's important. That's what we're waiting for. Now we need to know if we have bullish divergence. So we look down. The blue line is above the green line on this candle right here that pulls back. And it hasn't turned red yet. See, once it turns red, that's when we got to have the up close above the trend line. But as long as on the pullback candle, the cycle is still blue, then all we need is an up close. Okay? And so that would be this candle right here. There's an up close. Okay? And so this candle closed at 16.8575. Is that right? And this candle opened at 85.75. So that's the price that we would be buying, 85.75. 16.85.75. So just to make sure everybody understands the entry. Before anything can happen, to get a long trade, you got to have a bullish cross. Price has to pull away. Price has to pull back. You have to have bullish divergence. And on this pullback, because the cycle is still blue, all we need is an up close, which is this candle. This is an up close. So you buy the open of the next candle. The open of the next candle was 16.8575. Well, unfortunately, the swing high of this right up here, this swing high, is 87.25. I sound a little sad. Why is that? Well, let me explain. 16.87.25. If we get in at 85.75, in order to pull 2 points out of this trade, then we need it to go all the way up to 87.75. So we came within 2 ticks. We came within 2 ticks of hitting our 2-point target. Now, let me walk you through a couple of other things that would have happened. Now you'll see Michael do this in the live trading room every day. This candle here, remember you're entering on this candle. Okay. This candle, as soon as it closes above the CFMA1, this red-blue line here, as soon as it closes above, he is going to get his stop to break even. Okay? Break even. Where's break even? Break even is the open of this candle. So we risk 8 ticks on every trade. But once this candle closes above CFMA1, Michael is going to drag his stop up to break even. So now the only thing at risk on this trade is the commissions. Okay? It does give up a total of 6 ticks. We're looking for 8 minimum. It gives us 6. Then it heads the other way. So in theory, the worst case that would happen here, since you didn't get your full 2-point target, could have taken, when it started to top out here, you know, you might have just decided to get out of the trade. You might have scratched out with a couple ticks profit. or break even plus a tick so that your commissions are paid for, or maybe you got a point out of it. Okay, when we talk about getting 2 points a day, you don't always have to get them in one trade. It can be 2 trades of a point each. I mean, there's an infinite number of variations. So I know I sound a little, but you can't expect every trade that gives you the setup. You can't expect every one to run the 2 points. Sometimes, I mean, the fact that this trade made 6 points available, the fact that this trade made it possible for us to get our stop to break even, or even break even plus a tick before it headed the other way, that's a huge blessing. Because sometimes a trade will just turn on you and just stop you out before you have a chance to do anything, right? So, I'll get over it. Alright, now look what happens. Bearish cross. Sellers take control. Bearish cross. Price pulls away. Price pulls back. On the pullback, this candle right here, you got to check down here to see if you have bearish divergence. The red line is below the green line. That means you got bearish divergence. It also means you don't need a trend line. All you need is a down close. Okay? So, bearish cross, price pulls away, price pulls back. Now, on the pullback candle, you look down, it's red. So all you need is a down close. Well, you get a down close right here. This candle closes at 1684.50. And this one opens, obviously, at 84. So let's write that down. 1684.50. Now, we also got to take this tweet part out because this doesn't have anything to do with a tweet. It's just 1684.50. Same as this over here. Didn't have anything to do with a tweet. That was just the price that we would have entered. Okay. So, again, price pulls back. Cycle is red. So, all we're looking for is a down close. We get it. So that can happen. We got the pullback and the down close all in one candle. That's it, you know, an all-purpose candle, right? So the entry is the open of this candle, 1684.50. Okay. Well, what happens from there? From 84.50, price hits a swing low of 83.25. Now, 84.50 is only 1.5 points away from the weekly trading zone. And remember, we always have to have at least 2 points to run, right? So we didn't have 2 points to run here. So based on that, we would not have taken the short at 84.50. Did it, if now, just for argument's sake, if you'd have gotten in at 84.50, this swing high over here is 85.50. 85.75. If you had gotten into this trade at 84.50, you'd have had a chance to get out at 83.25. But then it would have pulled back up here and stopped you out. So see, there's a reason why we don't get in. Once we get within 2 points, we don't take the trade. So you just put a big X across here. No trade. Okay, so then what happens? Well, we get a bullish cross. Price pulls away, price pulls back. Need an up close, but before we can get an up close, the black step line gets pulled into the green line. See? Bullish cross, price pulled away, price pulled back. Look down here. Bullish divergence. It's blue. All we need is an up close. There's our up close, but the black step line has been pulled in, and that negates the trade, unfortunately, because it was a beauty. See that? It happens. And let's see. Now price rallies, it pulls back, and we don't get an up close over here. Here you'd need an up close above the trend line because this thing's turned red. So you don't get that before the step line pulls back in. And now there's just sideways action. So that's what happened. Okay, we set it up last night on the video. We saw it coming. We got ready for it, and the markets have continued to do that thing that we talked about, and that I was hoping today, being Wednesday, we'd be done with. This is the only weekly trading zone we've even touched this week, and this is so unusual. 82.83. It's been the center of gravity. Okay, we're above it, we're below it, we're above it, we're below it, we're above it. We've not even touched another zone. I can't begin to tell you how unusual that is, and how far you might have to go back in the charts to find a week that matches this. I don't even know that you would find one, quite frankly. In our third day, and only have touched one zone. But that's it. I got to wrap up this video. We're at 21 minutes, and I want to get it edited and rendered and published. So, thank you very much. I'll see you in the live trading room. Goodbye.